My name is Faiz and let me welcome you to this course on the General Ledger module in Microsoft Dynamics 365 Finance, formerly known as Dynamics 365 Finance and Operations. In this class, you'll learn about how to create the initial setups in the General Ledger module, how to post transactions, and then finally how to pull out inquiries and reports in the central module in D365 Finance. Before we get started, let me tell you a little bit more about myself. Now, I have been working as a consultant of Microsoft Dynamics 365 Finance for the last 10 years, helping customers, both small and large, to adapt their processes to what Dynamics 365 Finance has to offer. In this course, you will find easy to understand examples which will help you grasp the reason for the features to be developed by Microsoft and how they work within D365 Finance. With this course, my aim is to provide you with a nice foundation of the General Ledger module where you understand the concepts in a fast and clear manner. I also suggest that you build on this foundation by working on D365 Finance yourself by navigating through the menus, posting transactions, viewing reports, and this will in turn further solidify your knowledge acquired from this class. As a prerequisite for this course, I would say you would be better off having at least a basic accounting knowledge to help you understand the examples given in this course. And also I have created another course on Udemy which describes the UI navigation in D365 Finance, which I suggest you take before starting with this course. Welcome to this session of the training course where you will learn about General Ledger module in Microsoft Dynamics 365 Finance. In this section of the course, you will learn about the General Ledger module, which is like the central hub to which most of the other modules integrate to. For instance, a vendor invoice will be first recorded in the AP module or the purchase ledger by the AP team, but once it has been posted by the AP team, the relevant voucher entries will hit the General Ledger module. Similar is the case with the customer invoice being created in the accounts receivable or a timesheet created in the projects module. If let's say the AP module and the GL module were in fact two separate systems, this would have meant that all AP invoices at the end of the day had to be imported into the GL system either manually or with an integration. Dynamics 365 Finance does away with any such issues by directly integrating the GL module with the other modules in D365 Finance. Let's now begin and take a closer look at all the lessons that make up this module. In our first lesson, we'll start off with the chart of accounts. We'll go through why we need a chart of accounts, what are the ledger accounts that make up a chart of accounts, and also what are the important points that the company or your customers keep in mind while creating their chart of accounts. In lesson 2, we'll look at financial dimensions. A quick example of the financial dimensions would be the cost centers, the business unit, the verticals, the horizontals, the regions, and also departments and customers, projects. So all these can be taken as financial dimensions, which will help us capture the data in the right way and also be able to pull out the required reports for our management or for our external reporting. And then in lesson 3, we're going to look at the account structure, which basically puts together the chart of accounts and the financial dimensions together as a combination. In lesson 4, we'll get into how do we post actual transactions into the GL module, and we'll also look at how we can pull out the reports based off of this actual data that has been captured when we posted the transactions. In lesson 5, we're going to see the financial periods and period close. A good example of that would be the month-end close. And in lesson 6, we'll look at GL allocations, which is basically dividing the expenses that have been incurred, let's say on one ledger account or one department or one financial dimension, and allocating it out to the rest of the departments or to different ledger accounts. In lesson 7, we'll look at intercompany accounting, which is basically a transaction that impacts more than one legal entity within Dynamics 365. And lastly, in lesson 8, we'll look at how we can consolidate the financial results coming in from different legal entities into a single legal entity. In this lesson, you'll learn about chart of accounts, what constitutes a chart of account, whether you would have a shared COA or a company-specific COA. Now, in any Dynamics 365 Finance implementation project, the first step is to configure the General Ledger module. And as part of implementing that General Ledger module, the first step is creation of the chart of accounts. Now, a chart of account comprises of different ledger account types like profit and loss, revenue, cost, assets, liabilities. These would be the ledger account types that will be required for posting transactions by a company in D365 Finance. Now, D365 provides for a shared COA, meaning that I can have one single chart of account created and mapped to company A, B, C, and D, meaning that all of them will be using the same chart of accounts. So anytime that I create a new ledger account in this shared COA, the same new ledger account will be available for use in all 4 companies. Now, this will be very helpful when you have a shared COA, because all of your transaction reporting will happen at the same ledger account number in all 4 companies. And this will make it easier furthermore for pulling out of reports. So let's take an example and say 601001 is our salaries account. And if it is the same ledger account number in all 4 legal entities, it makes it easier for the person who's pulling out reports to always just give a reference of this ledger account number 601001, and the same ledger account number will pull out data from all 4 legal entities. Now, in case the chart of account was not shared, the salary account could be different in each of the 4 legal entities, which will make it a little more of an exercise where a person has to do some kind of mapping that if a specific ledger account number is there within company A, will equate to a salaries ledger account number, but which could be different from the one in company B. So this kind of mapping exercise would be required if you have different ledger account numbers for different purposes. So the question of whether you would go for a shared COA or a company-specific COA should come out when you start discussing it with your customers as to what would they prefer. Based on my experience, what I've seen is companies go for shared COA as long as they have the same reporting structure, and statutorily they have not been asked to have a separate COA. Some countries like France, Brazil, or India, let's say, have some specific ledger account numbers that need to be created in the COA, then they will go in for a company-specific COA. But every time there is a different COA for a company, in your reporting exercise, you will have to ensure that the account numbers are mapped properly to your global reporting COA. So as you can see, this is a chart of account on my screen. I have a ledger account number, which is my main account number. And there is also an account type, whether the ledger account is an asset, is a liability, is a profit and loss type, or specifically whether it's a revenue or expense. So every time you create a new ledger account, you will have to assign these important field types. And then there is also a separate field for main account category. So in this example, if you look at it, you have 110110 bank account USD, and then we have separate ledger accounts for Canadian, Chinese, Euro, GBP, INR, and so on. So in case I'm pulling out a report for me to be able to see the bank ledger balances within my trial balance, I will have to actually look at ledger account number starting with this 110 right up till 110180, let's say. Or rather, since we're talking about bank accounts, we'll say 110170. So I will have to give this ledger account range to be able to pull out all ledger account balances of type bank. Instead of that, what I will do is when I'm pulling out my reports, I will say pull out all reports which belong to the main account category equals to cash. So this makes my report building task a lot more easier. Also, because as you start with a chart of account, you might start dealing with multiple bank accounts and you might start transacting with different currencies. So your chart of account might keep growing over time. So you will not need to modify your reports based on account numbers as long as you have tagged it to the main account category. Also, another important field in the screen is the do not allow manual entries. So this checkbox will be marked for all of my sub-ledger accounts, meaning that whenever a bank account entry is posted, I will have to post it through the bank ledger or the AP ledger or the AR ledger. So I cannot post a direct ledger entry or voucher entry to this ledger account numbers which has the flag do not allow manual entry mark. This will ensure that my subledger is always in sync with my general ledger balances. At this point, let's quickly jump across into the application, and I'm going to create a new ledger account for you, and we'll touch upon the important fields that we spoke of a little earlier. So let's now go across into a general ledger module, chart of accounts, and then chart of accounts again. So as you can see, there are different chart of accounts out here for different regions or countries. So this would be a typical case where you're using different chart of accounts for each legal entity in a specific country or region. And let's say I'll create a new bank account of type Australian dollar. I can see that the last account number out here is 110170 bank account type SGD. So I'll create one right after this. 110171. Remember the account types we spoke of. These are the different account types that are there. You can either select balance sheet or asset. My bank account, I would say, is an asset. And in my main account category, I'll select the same as cash. And I'll also mark this as do not allow manual entry. So with this, we have created a new ledger account number for bank account Australian dollar. And this new ledger account number 110171 is basically ready to have transactions posted to it. In this lesson, you will learn about financial dimensions in Dynamics 365 Finance. Typical types are business units, regions, departments, cost center. You can have some further dimensions like customers, vendors, projects, and so on. Now, why do we need financial dimensions? Let me give you an example. If I were a finance person sitting in a company and I had to record, at the end of the month, I had to record my salary expenses by each department. So if I did not have financial dimensions, I would create separate salary accounts for each of my departments. So I will create a ledger account for salary finance, another one for salary HR, another one for salary IT, admin, and so on for each of the departments that I have within the company. And this will keep making my chart of accounts bigger and bigger. So at the end of it, I would have a really large number of ledger accounts that would be sitting within my COA, which I would like to avoid just to minimize the chances for errors that the user posts the entry against the wrong ledger account number. So instead of that, I'll create a single salary ledger account and then I will create each of these departments like finance, HR, IT, admin. I'll create them as financial dimensions, and when I'm posting the salary entry at the end of the month, I will post it against a single main account number. In the dimension, I'll say finance so much, and then I'll create a second line in my journal for the same salary main account number, but this time I'll select a different department, let's say HR, IT, admin, and so on. So a single ledger account number, but multiple dimensions that can capture the amount that has been posted for salaries for the entire company against a single main account number. And if I wanted to see by department how much I have, so I'll have an additional dimension for department to track the individual expenses or the salary expenses that have been incurred each of my departments. So as I said, typical types that you would have would be your business unit, department, cost center. You can even have company as a financial dimension in case you have multiple legal entities, and when you're doing a consolidation, you want to see how much or what was the entry that's come from each legal entity. You can create the company also as a financial dimension. And if you're a project-based company and you create a lot of projects to work with your customers, you can have the project ID as a financial dimension too. So this was the example that I was talking to you earlier about. I would have salaries, wages 60 to 100 as the main account number. And then in my departments, I would select different for finance, HR, IT, and so on. So here is an example of a typical organization structure. We have Contoso at the top in the red box, which denotes the legal entity. And then within that, we have business unit, which is in the green boxes. So we have IT, steel, aerospace, telecom, automobile as business units. And then in the purple boxes, we have the divisions. So under IT, we have mobile, cloud, business applications. And under automobile business unit, we have bus, cars, and trucks. Further down in the gray boxes, we have the cost centers, which is north, south against each of these divisions which are in the purple boxes. And at the lowest level, we have the departments in the blue boxes, like departments like finance, sales and marketing, commercial, and then manufacturing in case of the automobile business unit. So this is how we design the organization structure within Dynamics 365 Finance. Now this structure could be different based on the customer that you're working with. So each customer will have their own organization hierarchy. So you just have to talk to them and find out what they have as divisions or business units. They might call business unit as something else. They might call it as verticals. The language from the customer side could be different, but whatever is their organization structure, you can design that within Dynamics 365 Finance. So let's say that each of these has a different head. So there's a different head for each of the business units. Within the business unit, for each division, there's a different person who is responsible for each division. Similarly for cost centers. And right down at the department level also, there could be a different person heading the finance department and different person heading the sales and marketing, commercial, manufacturing, and so on. So to satisfy the reporting requirements for these department heads, you can actually pull out reports based on the lowest level by pulling out a report which looks at each of the departments that exist within all of the cost centers, divisions, business units within the company, Contoso company. And basically pull out a report for finance, let's say to look at all the expenses that have been incurred for the finance team across the company. And you can also say that if I want to look at only finance for mobile, run the report which pulls out both for north and south and for mobile division. Now let's take a look at something else as to how we're going to be able to pull out cost center reporting. So if there's a requirement that you want to look at all the expenses and revenue that has been generated at the North Cost Center under Mobile Division, you could do that by pulling out a report which sums up all the department expenses and revenues that have happened, and then it shows up against the Mobile North Division. You can pull out a cost center report for each of the cost centers that exist within the divisions or the business units. And then similarly, we can look at the division-wise reporting as to how much revenue was generated or how much expenses was incurred at each of these division levels, which are in the purple boxes, like mobile, cloud, business application, bus, cars, and trucks, and automobile business unit. At a higher level, you can look at all the revenue that has been generated, expenses that have been incurred, and also you can run these reports of actual versus budgets at each of these financial dimensions level. So there may have been a budget created at the IT business unit level, which gives out the budget for the year for IT as to how much expenses they can incur for the IT business unit, and then the actuals which come out based on the transactions that have been posted against these business unit or the financial dimensions. Furthermore, on the financial dimensions, there are about 39 master linked financial dimensions. A master link dimension is a master like customer master or vendor master. So if I were to turn the vendor master into a financial dimension, each time a new vendor is created, a financial dimension ID is also created automatically by Dynamics 365 Finance. So this makes it easier for the person or the user to not have to separately go and create a separate financial dimension each time a new vendor is created. Now, what if your customer says that he wants a separate financial dimension which is not there within these 39 master link dimensions that have been provided by Microsoft? In that case, you can create a custom or user-defined financial dimension which will be created not because it's not linked to a master. It will not be created automatically. The user will have to go and create a new financial dimension value each time they need a new tracking dimension. We'll look at both of these dimension types, the master linked as well as the user-defined dimension type in our demo when we walk across into the application. Also, another point to keep in mind that some of these dimensions are shared, like business unit, cost center, department are shared financial dimensions. So anytime that you create a new business unit, it will be available for selection, not just in one legal entity, but all legal entities within the Dynamics 365 Finance instance. And then there would be the company-specific financial dimensions like project, customers, vendors, because if you have a project financial dimension, when it is created as a new project in company A, it will not really mean that each and every legal entity like company B or company C will also need the same financial dimension to be created. Also, in terms of defaulting rules, the financial dimensions that I capture at my master level will default onto the transaction level. So this makes it easier for the person who's posting a transaction to not worry about which financial dimension he needs to select. Right? So the typical example is that if you have a new customer created and you know that this customer belongs to a specific business unit, a specific division, or a specific cost center, you can capture these financial dimensions at the customer master level. So when a sales invoice is created for that specific customer, these financial dimensions will default from the customer master, the business unit, division, the cost center will default from the customer onto the transaction level. In this lesson, you'll learn about account structure, which is basically bringing together the main account number from our chart of accounts and also the financial dimensions like business unit, region, cost center, department together as a combination and telling the system or telling D365 Finance as to what will be our mandatory dimension. So in this screenshot, what you can see is there are two ledger account number series that have been given. So let's say that whenever voucher entry or a journal is posted, if the ledger account number or main account number falls within this series, I need the financial dimension department to be always given by the user. So in that case, I will mark this department as a mandatory dimension. And this will ensure that when a user is trying to post a manual journal or invoice or any of the sub-ledger transactions which create a voucher in general ledger module, it will ensure that if the department is empty or not given by the user, that the posting of the transaction stops and an error pops up on the screen which tells the user that he has missed giving the department value, and up till he gives the department value, it will not allow the posting to go through. Now, what this does quite well for the reporting is that when the reporting team pulls out a report by department of a specific ledger or main account number, it will always have a department value. Let's now jump across into the application, and as part of the demo, we're going to create a new financial dimension, and then we'll look at the account structure also in a little more detail and explain this concept of making the financial dimension as a mandatory field. So let's now go across into the general ledger module. And last time we saw the chart of accounts, so this time I'll open the chart of accounts, and under that I'm going to open the financial dimensions. And here you can see different types of financial dimensions that are there. So if I were to select the department dimension and I click the dimension values, I will see all the departments that exist within my company. So I have a sales and marketing, operations, finance, IT, HR, legal, and so on. Similarly, I can open the cost center as well. And I can look at the dimension values that exist for the cost centers. So let's now look at the customer. So what this does is, this is a master link type financial dimension, which means that every time a new customer is created within my legal entity or company, a new financial dimension value is also automatically created. So when I create a new financial dimension, I can see the different types of financial dimensions that have been given out from Microsoft, which are linked to masters. And right at the top, we also have a custom financial dimension, which is the user-defined financial dimension, and you can create your own dimension type, call it user-defined or anything that the customer wants. And then I can go ahead and create financial dimension values, new financial dimension values within this user-defined financial dimension. So now we can take a look at the balance sheet account structure. So here you can see that there is a series of main account numbers or ledger account numbers. And when I click the financial dimensions, at the bottom I can see that blank values are allowed. So what this means is that when a journal entry or voucher entry is being generated for this series of main account numbers, even if the user has not given a business unit, the system will still allow the voucher entry to be posted. I'm going to edit this account structure, and I'm going to take off the blank values allowed, and I'm going to say apply. So what this means is that whenever journal entry is posted or a voucher entry is posted to this account series, any account number within this series, it will give out an error if the user has forgotten to give a business unit financial dimension value. So this is the way that you capture the right amount of information when the transaction is being posted itself. That way all of your reports will run properly or give out the correct financial data that you need. There's also a status on the account structure, whatever changes that you had to make in your account structure. Once you're done with it, you can go ahead and activate it, and then that makes the status of the account structure as active. So now we have seen that this is the account structure for balance sheet, and we are seeing business unit, department, and project as financial dimensions. Let's go ahead and take a look at the account structure for profit and loss. And you can see different financial dimensions which have been activated for the profit and loss main accounts. Out here, you can see in the profit and loss account structure, the status is draft, meaning that it is still not yet active. So I can go ahead and add another segment that for my profit and loss reporting analysis, I need not just business unit, department, and project, but I can go ahead and add another financial dimension as well. So out here, I'm going to select cost center and add it as a segment. I'll leave the blank values are allowed as unmarked, which means that cost center is mandatory for all voucher entries that are generated for within these series of main account numbers. Once you're done, you can go ahead and validate it. If there are any errors, it will show up. In my case, it is saying that this account structure is okay. So at this point, as the last step, I'll go ahead and activate it. Just to recap on the skills that you have learned in the lesson so far, we've spoken about chart of accounts. You have learned about how you can create a new ledger account or main account within a COA, and also the difference between a shared COA and a company-specific COA. And then you have learned about the financial dimensions like cost centers, departments, business unit, regions, and so on. When to create the different types of financial dimensions like master link financial dimension and then user-defined financial dimension, and as to how it gets used within transactions as well. And lastly, you've learned about account structures, having different account structures for balance sheet, ledger account numbers, and then different for profit and loss account types. How you can make financial dimensions, or how you can make specific financial dimensions as mandatory dimensions in your account structure, which will ensure that the transaction does not post if the user has forgotten to fill in a financial dimension. In this lesson, you will learn about how to tag or map a chart of account and an account structure that you learned about in the previous lessons to a legal entity. Now, the important thing to remember here is that you can tag one chart of account and multiple account structures to a legal entity. We're going to follow this up by looking at how to post transactions through journals. We'll look at both the manual way of creating a journal where you have lesser number of lines to be entered, the user can enter it manually. And in the other case where you have a lot of lines that a user has to enter, he can enter those in Excel using the copy paste kind of functionality, which makes it easier for the user. And then from Excel, push all of these lines back into Dynamics 365 Finance. And then these journals can also be posted straight away by the person who's entering the journal, or you can enable a workflow approval system by which the user who creates the journal will not be able to post the journal himself, but instead he will send it another person to his manager or to his higher up authority to review the journal and post it. So all of this mechanism works through D365 Finance itself, with support in the form an Outlook email that goes out from the system telling the approver that he needs to approve this journal. And lastly, we'll look at how the journals, how the transactions that we posted in the earlier steps will show up in our GL reports and trial balance. With this, let's jump across into the application now. As a first step, let me show you where we tag the chart of accounts and the account structures to the legal entity. Currently, I'm logged into the GBSI company. So I'll go to General Ledger, Ledger Setup, and open the Ledger screen. And here you can see that the chart of account tagged to this legal entity, GBSI, is the shared chart of account. Below that, we are seeing the different account structures that is tagged to this legal entity. We have one account structure for balance sheet and one account structure for profit and loss. In this same screen, you will also tag the fiscal calendar that's applicable to the company and as well as the accounting currency for the company. So in my case, GBSI is a UK entity, so I'm going to tag GBP out here as my accounting currency. And if your reporting currency is different, you can tag a different reporting currency here as well. And in case GBSI transacts in multiple currencies, the exchange rates can be entered within this default exchange rate type. Let's now jump across and try and post a few transactions. To do this, I'll go across into the General Ledger module. I'll open Journal Entries and General Journals. So this is the General Journal header screen. So I'll click on the New button and select a journal. And in the description, I can give in a description saying this is the journal entries for today. As a next step, I will actually go inside the journal to enter the actual debit and credit lines. So for this, I'll click the lines button. Over here, you can see the various fields of the journal lines. So there's a date, so I can choose a different date that I want. Next to it is the voucher field, which automatically generates the voucher number. There's a company selection as well. So I'm currently trying to post a journal entry in GBSI. So I'll leave the company as GBSI. And in the account type, I can see ledger, customer, vendor, project, fixed assets, and bank. So what this means is through this general journal, you can enter a transaction, with a debit or credit to any of these account types. In my case, I'll just keep it as ledger. And once I've selected ledger, the next field, the account field, shows me a list of all the ledger account numbers. Similarly, if I had selected, let's say, vendor, it will show me a list of all vendor IDs within the system. Let me revert it back to ledger. And in this case, I need not remember the ledger account number that I had within the system. So as long as I remember a part of the name of the ledger account, in my case, let's say I'm trying to post a rent entry. As you can see, it is showing me two ledger accounts which has rent in the name. So I'll select the second one, 605150. And then it is prompting me to select the financial dimensions. I'll select business unit, service line, and project. In the next field, it is expecting a description or transaction text. I'll say rent expenses for October, give an amount for the rent expense. And in the offset, I'll have to select the other half of the voucher entry. So in my case, I have debited 605150, which is a rent account, to the tune of 2000. So the credit part will be specified in the offset account. So I'll just select, let's say I want to put this to an accrual account. So it is not showing me accrual. So instead I'll choose accrued purchases. And then let's quickly take a look at some of the other important fields within this journal line. So there is currency. So in case I'm trying to put in a transaction in for, let's say, USD or Euro currency, I can change the currency out here. I can select a different currency. In my case, the rent expense is a local rent expense itself, so I'll not make a change there. And then there is the item sales tax group and sales tax groups. So if you look at the bottom right now, it is saying that the sales tax is 0. So in case I have a transaction which has sales tax applicable to it, I will have to choose one of the sales tax groups. So I'll select AP domestic. And out here at the bottom, you can see that the sales tax has now calculated. So to have sales tax on a transaction, you have to select both the groups. So if I remove any one of them, the sales tax will go back to being 0. And the last two fields are reversing entry details. So in case I want this transaction to be reversed as of the 1st of next month, I can choose the date and also mark the reversing entry checkbox. In my case, I'll uncheck it. So once a journal line is entered, I can go ahead and validate it. So if there are any errors, it will pop up on the screen and tell me that there is some error in this journal which I need to correct. So in my case, it is saying the journal is okay. So this is the way that you enter one single line on a journal. This does not, however, mean that you had to create one separate journal for each separate line that you're trying to enter. So within the same journal that I had created earlier, I can enter multiple journal lines all against the same journal header. So let's now quickly go and create one more line. So in this case, let's say that I do not remember the name of the main account or the ledger account that I need to post an entry for. So I'll just say that it starts with 6. That's all that I remember. So I'll say 6 and then I can choose one of the accounts that's showing up out here. So for our example, let's take the second one, which is freight. And as I jump across into the second field or the subsequent field, it is telling me that the business unit dimension cannot be blanked. So I'll go back into and select a business unit this time. Similarly, I'll select service line and project as well. So let's say this is 500. and offset I'll give in the same accrued expenses for purchases. So now I have two separate journal lines that I've entered to two separate accounts. So let's go ahead and validate it and make sure that there are no errors within this journal entry that we've just created. So it is telling me again that the journal is okay. Go ahead and post this journal. So as you can see, it is telling me that the operation is completed and it has posted two separate vouchers for this. So if I click the first line, I click the voucher, it shows me the debit and credit for that voucher. So you can see that the rent expense has been debited and the accrued purchase has been credited. Similarly, for the second line, I can click the voucher again and it will show me the same sort of debit and credit. So in this case, we had chosen freight as our debit entry. So that's got debited and the credit part is still going to the accrued purchases. So now that you've seen as to how do we create a journal and successfully post it in the manual way, as the next step, we're going to start off by looking at how to create this through Excel. So now let's go ahead and create a journal basically in Excel and then push those journal lines from Excel into D365 Finance. I'll create a new journal header, given a description. Instead of clicking the lines button straight away that we did last time, so in this case I'll select open lines in Excel. It is going to ask me what kind of template that I want to enter right now, so I'll select general journal line entry. And this is going to download an Excel file for me, so I can go ahead and open this file. So this is the Excel file which opens up when I download it from Dynamics 365 Finance. Because I want to enter journal lines to it, I'll click on Enable Editing. So once the Excel file has downloaded into an Excel format, you can see that the columns are very similar to what you had seen in our manual journal entry. There's a date, company, account type, and then you have to select the account numbers, given a description, currency, debit, credit, and then the offset details. And once you've entered all of these lines in Excel, there will be a publish button at the bottom. You can click it and this will push all of the data back into the general journal screen in D365 Finance. In the previous case, we had created a general journal manually and straight away we had gone ahead and posted it. So in this case, let's try and enable a workflow approval system for this general journal. To do this, I'll select the general journal. And against the journal name, I can see that the approval is currently set to no, so I'll turn this on to yes. And I'll also select a workflow, and I'll select a workflow for this journal. So let's now create a new general journal, given a description for it. And right here at the top, you can see that the post button is now disabled. Instead of that, we have a workflow button which allows me to submit the journal for workflow. So let me create a line. Let me select the same example that we had selected earlier. Select rent. Select some dimension values. And select an offset account for this journal line. So out here again at the top, you can notice that the post button is disabled. The only way for me to take this journal forward is to basically submit it to workflow. So I'll go ahead and click on submit. And this journal has now been submitted to workflow, and I can go ahead and either recall it. If I notice that there is a mistake that has happened within this journal, I can recall it and it comes back to me, to the user who created the journal, to make the edits. Alternatively, I can look at the view history to check as to where the journal has traveled to, and it will show me a list of all the actions that have happened on the journal. The person who submitted it, the date and time it was submitted, and then whom was it assigned to as an approver, and when that approver finally approves it or rejects it, that action will be recorded as well. Once the approval is completed, finally the post button will become enabled, allowing the user to go ahead and post the journal entry. So that was on the workflow enabled journals. I hope you have understood the difference between a manual journal without workflow approval and then having it enabled, and basically submitting the journal and another person approving it. As a last step, we can now go ahead and look at the trial balance report, which we can see from Enquiries, Reports, and Trial Balance. So this is the place where all the transactions that we've been posting will show up. So I can select a date range for my trial balance. So just to look at the journal entries that we have posted today, I'll select today's date. And I can go ahead and say calculate balances. So this will show me a list of all ledger entries or voucher entries that have impacted as of today. So there are a lot of entries that have been impacted. Specifically going down, if I want to search for something specific, I can say the rent account that we've been posting some entries to. You can see that this is the 605150 account, and there are some debit expenses that have been incurred or posted against this ledger account number. So I can click the debit to show me the actual journal lines. There were two journal lines that have been created, one for 190 and one for 2000, with the date also showing up. Similarly, the financial dimension set that I selected is main account. So in case I want to view this as main account plus the other dimensions that we had, so in this case, let me select main account and department. So I'll say calculate balances. As you can see, there is 130100. There is two lines out here, but different dimensions. So that's why it has come out in different lines in my trial balance, and there's a different amount also against each line. And as you can see, each line will show up with a separate balance. And if I want to explore this balance further, I can click the blue hyperlink and it will take me inside and show me what this 200 is made up of, or what this 26640 is made up of. So this completes our lesson on transaction posting. Just as a recap, in this lesson you've learned how to tag a chart of account and multiple account structures to a legal entity. And then we saw as to how we can create journals both manually and the Excel way of pushing journal lines from Excel into D365. We followed this up by looking at how we can enable workflow approval for journals and how those can be posted. And lastly, we saw a trial balance report which allowed us to view balances for the main account, and also as a combination of main account plus the other financial dimensions. In this lesson, you learn about financial year and financial periods, basically how to create a financial year for a company. And this financial year could be Jan to December, or April to March, or October to September, depending on the country that you're implementing this product for. Once the financial year has been created, you would have divided that financial year into separate financial periods. And then you learn about how to maintain these financial periods, which is basically marking them as open, close, or temporary close or temporary hold. So let's now jump across into the application to have a closer look at financial periods. To open the fiscal calendars, I'm going to go into the general ledger module and then calendars and fiscal calendars. Let's now go ahead and create a new calendar. I'm going to call this F5 calendar, financial year calendar, and I'll leave it on from January to December. And length of period, you can leave it as 1. As a last step, I'm going to go ahead and click the create button. And here I can see that the first year under this calendar, 2020, has been created. And for the next year, let's say that I've finished 2020 and I want to create a new year for 2021. To do that, I'm going to click on the New Year button. It basically gives me the start of the fiscal year and the end of the fiscal year based on the setups that have already been there for 2020. So I'm going to leave the fiscal year name as it is and go ahead and click the create button. So this is a process that you will keep repeating each year as you move from one year to the next year. Another thing to note out here is for each fiscal year, you're seeing that it has divided it into a number of financial periods. And there is a type as well. You can see opening, operating, and then the third type is closing. The opening period type is for transfer of your opening balances. Similarly, the closing period type is for the transfer of your closing balance entries. Now, in our previous lessons, we had spoken of how a fiscal calendar and chart of accounts can be tagged or mapped to a legal entity. So I'm going to just refresh your knowledge on that by clicking the Ledger Setup and Ledger. Right next to the chart of accounts that was selected, there is the fiscal calendar, which means that GBSI legal entity or company follows this fiscal calendar. And if I click on the ledger calendar, it shows me the periods within the fiscal calendar. So I can see different periods out here. So as you can see, this same fiscal calendar is mapped to multiple legal entities within this instance of Dynamics 365 Finance. So I'm going to select 3 legal entities, USMF, GLMF, and GBSI. And basically, let's assume that my finance team has gone ahead and closed the previous period or previous month. In this case, it is September. So they've asked me to update the period status to temporary close or temporary on hold. So as you can see, there are 3 statuses out here. There's one is on hold, which is like a temporary close. So you can reopen an on hold period and post some more additional entries, adjustment entries as needed by your finance team. Open, of course, is the period where you can continue to post transactions into this open period. And permanently closed is something that is usually done at the end of the year when you have closed your entire financial year. That's when you update this to permanently closed. So for now, I'm just going to say on hold and update. As you can see, it has updated 3 legal entities from USMF, GLMF, and GBSI to on hold period status. So this means that the users cannot post an entry into September because officially that month is already closed. Right next to it, there is also a status for each of the modules like ledger, sales tax, bank, customer, vendor, and projects, and so on. So this gives me a selection of all, none, and some user groups that is there. When I select a specific user group, let's say I select test group 1, what it means is that it is only users belonging to this test group, user group, will be able to post transactions. Anybody or any user which is not belonging to this test group 1 user group will not be able to post transactions. So this is a good way of restricting the access to a particular module only to a specific user group, like the finance team might continue to post some adjustment entries for the month of September. But for the rest of the world, like accounts payable team, sales team, inventory team, production team, the month of September or the previous month is officially closed and they will not be able to enter any kind of transactions into D365 Finance. Welcome to this lesson where you learn about how expenses are allocated or the GL allocation process is run within D365 Finance. So you may have this question as to what is an allocation? Why does a company need an allocation process? So let me give an example here. Let's say the customer has an office building. They pay a lump sum amount of rent each month to the landowner or the building owner, and this entire amount or lump sum amount needs to be divided between the departments or the business units which house within the office building. So let's say in this example, as you can see, the rent expenses of the entire office building is paid off as a lump sum amount, and then at the end of the month, this amount needs to be allocated to BU01, 02, 03, and 04, because these 4 business units are housed within that office building. Now, what is the basis or what is the proportion or percentage or ratio in which these expenses need to be divided? A good way of dividing something like a rent expense is the amount of space that is occupied by each business unit. So let's say business unit occupies an X amount of square foot and business unit 2 occupies Y amount of square foot, and that way going on to the rest of the business units. So by running the GL allocation process in D365 Finance, such rent kind of expenses or other overheads or other common expenses like gas, electricity can be divided across the financial dimensions that exist within the company. So let's take a closer look as to how do we configure such kind of allocations and how the process is run each month so that the expenses that have been accumulated at the end of the period or at the end of the month are straight away allocated to the financial dimensions that have been configured. So for our first example that we spoke of, rent being divided between the 4 business units, the first setup or the first configuration that is required is to decide on the proportion as to how the expenses will be apportioned. The sales and marketing team is spending on the advertising of their products and services to the outside world, and they are paying the advertising agency a lump sum amount. Now, how do we divide that lump sum amount between the business units or between the departments and the other financial dimensions within the company? A good way of doing this would be to look at the revenue being generated by each of the business units, and then to divide the advertising or marketing expenses in that same ratio in which the sales is being generated by the business units. To do this kind of example, I will have to first set up a ledger allocation basis. And let me select the sales account allocation basis. And at the top, there is a source button where I'm basically going to define when the allocation process is being run, look at the amount of revenue that has been generated into this account, that is 411,100, which is revenue labor, and basically divide the advertising expenses that has been incurred as the lump sum amount in the ratio of the entries with dimensions within this sales or revenue account. Once the ledger allocation basis has been configured or set up, I can go ahead and configure something called ledger allocation rules. And in this, if I look at the S&M expenses, I'll click on the edit button. And in the general tab, I'm saying that the allocation method needs to look at the basis. And then I'm going to specify an allocation journal name into which the new or the allocated ledger entries should show up. And in data source, saying look at the ledger account. And if I click source, I can see that my source will be the selling expenses ledger account, which is 601,200. So whatever expenses will be there at the end of the month in selling expenses or 601,200 ledger account will be divided or will be allocated on the basis of the revenue entries that exist within the labor revenue ledger account. And in destination, I'm basically going to define to which business unit the sales and marketing or advertising expenses need to be allocated to. The first one, I've said, send it to the same ledger account, but to a different business unit. That is 081. And another one, I've said 082 for the second business unit. So let's now go ahead and take a look at my trial balance. I'm looking at the trial balance for last month. I'm going to click on calculate balances. And I'm going to look at 601-200 account. And you can see that there was some expenses to the tune of 200,000 out here sitting against the 601-200 account. Now let me just go back into my allocation now. Basically process an allocation request. And in the rule, I'm going to select that S&M expenses rule that I had created. And I want to run this as of end of October. And posting date as well. I want to have end of October. And in terms of the proposal options, it is giving me two options, whether I want to go ahead and post it or I just want to propose it and then the user can check it and post it on its own. So I'm going to select proposal only and click on OK. So this is currently processing the allocation rule that we had set up. So it is telling me that the operation is completed. If I go back now into my allocation journals, I can see that a new allocation journal has been created. If I click lines, that the 200,000 that was incurred as sales and marketing expenses has been divided into 081 business unit and 082 business unit. Of course, there are some other expenses as well within that account which has got allocated as well. But for us, in terms of the example that we had seen, the 200 that was incurred as a lump sum amount as advertising expenses for the company has been divided into 081 business unit and 082 business unit. So the finance user can come into this allocation journal, check it, and if he's happy with the allocation amount, he can go ahead and post it. Let me now return back to the ledger allocation rules and show you some of the other options that exist within the allocation rules. The allocation method that we spoke of was the basis, where it checks the ledger balances within the other revenue or any other sales ledger account, and on that basis it just goes ahead and divides the expenses that have been incurred or allocates the expenses in that ratio or in that proportion. The second method is the fixed percentage method, and a good example for this would be the office rent that needs to be divided between the 4 business units, and the amount of space occupied by each business unit is usually fixed. So you can say in terms of percentage it is occupied as 20, 30, 25, 25 between the 4 business units. So if that percentage is provided here as a fixed amount, then each month you can keep running this allocation request, which basically divides the lump sum rent amount that is paid into the 4 percentages that we have just configured. So this is the usage of the fixed percentage. Similarly, you could have a third method, which is the fixed weight, which basically divides the amount of expenses at the end of the month in terms of fixed weightage that's been given by the user. So a good example for this could could be the staff welfare or the canteen expenses or the food expenses that are being incurred for the welfare of the employees. How do you allocate such kind of expenses? A good way of doing this allocation would be the number of people within each department or within each business unit. So this is something that could vary from month to month. So a good way of allocating this would be the fixed weight method. The last one is equally. So you could divide your expenses or accumulated expenses or lump sum expenses equally between the dimensions or business units or departments that have been specified. Just to recap, in this lesson you've learned about the GL allocation process that a company does, as to why you would need an allocation process, what are the kind of expenses that typically form as a common or overhead kind of expenses which you need to further allocate down to the other financial dimensions like business unit, cost centers, departments, or other financial dimensions that could exist within your company. Well, in this lesson you learn about how intercompany transactions are recorded in Dynamics 365 Finance. Firstly, let's understand what constitutes an intercompany transaction. An intercompany transaction is basically a transaction between two legal entities within the same group. To better understand, let's take an example of Google company or Google group. Now, Google within itself will have hundreds or thousands of sub-entities or legal entities. And the financial results of all of them put together constitute the Google Group financials. Now, a transaction that happens between one Google legal entity and another Google legal entity is actually an intercompany transaction. Now that you have understood what is an intercompany transaction, let's understand the types of intercompany transactions that can exist. First is the goods or services being bought by one legal entity from another legal entity within the same financial group. The second type of intercompany transaction is not a sale or purchase between the two legal entities, but instead it is just an expense of one legal entity being paid by another legal entity. And it is this second type of intercompany transaction that we'll be covering in today's lesson. Now let's understand this better by assuming that there are two legal entities, USSI and GBSI. Now USSI is a US-based entity and GBSI is a UK-based entity, but both of these entities are within the same financial group. Now let's assume that a US employee travels across from the USSI company to conduct some meetings within UK and he visits the GBSI office. Now while this US employee is in UK, all of his hotel expenses and food expenses that has been incurred are being in fact paid by GBSI. Now if you understand this a little more closely, all of these expenses do not really belong to GBSI. So they're not really expenses or P&L items of GBSI. But in fact, these are expenses of the USSI company, which are being just paid by GBSI. Now let's take that example of that hotel booking for the US employee. At the end of his stay or at the beginning of his stay, the hotel will send an invoice to GBSI. But this is not an expense of GBSI, so it will not end up in the P&L of GBSI, but it's in fact an expense of USSI. So when GBSI is recording this transaction, they will need to book a payable to the hotel vendor because they need to pay for the invoice. But on the other side, the debit part, they do not really record it as an expense or P&L item. Instead, they will say that this is the money that is due to be received from USSI. On the flip side, or in the books of USSI, they will record that hotel expenses as an expense in their P&L. But on the credit side, they do not really select the hotel vendor as the vendor that they need to pay the invoice for. Instead, they will say, this is an amount which we need to pay back to GBSI as an intercompany transaction. If you look in the books of GBSI, that the debit needs to go to USSI intercompany and the credit is the hotel vendor. Whereas in the books of USSI, they will record the debit part as an expense, and in the credit, instead of the hotel vendor, they will select GBSI because GBSI has already paid the hotel vendor. So what D365 Finance does is that since USSI and GBSI will be two separate legal entities, both within Dynamics 365 Finance, it does the recording of the intercompany transaction as an automatic posting. So it does not require that when GBSI books an invoice in their own books, a separate transaction need not be recorded by USSI in their own books, because the original hotel invoice booking against the hotel vendor will end up posting the transaction in USSI as well. So let's now jump into the application and you can see as to how this entire process can be automated and the automatic posting works within Dynamics 365 Finance. So the first setup that we'll have to do for this intercompany transaction is the intercompany posting setup. And this you can see under General Ledger, under Posting Setup, there is Intercompany Accounting. Clearly, there are a lot of relationships between multiple legal entities out here. So the one that I'm interested in is USSI and GBSI. So in the books of USSI, the debit account that will be used is 133-100, which is Intercompany Receivable GBSI. Similarly, there is a credit account to be used, which is 231350, and that is Intercompany Payable GBSI. And in the books of GBSI, you will have a similar intercompany receivable and an intercompany payable. Now what you see on the screen is the same ledger account that has been mapped in both legal entities. But these accounts can in fact be different, and you could have different intercompany receivable GBSI and a different intercompany receivable USSI. Now with this setup being there, let's go ahead and record that hotel vendor invoice that we spoke of earlier. So to do this, I'm going to go across into my accounts payable and book my vendor invoice. So I'm going to choose invoice journal. So I'm going to click new and select a vendor invoice. Give in a description and click on the lines button. So the US employee who came across to GBSI to visit and have the meetings has stayed in a hotel, and that hotel vendor invoice is what we are entering right now. So in my case, I'll just select one vendor. Give an invoice date. Given an invoice number. Given a description for the transaction. An amount of the invoice. And out here in the offset account, the normal course is that when you're booking a invoice for GBSI, the offset also will belong to GBSI. But in this case, the offset is not an expense of GBSI, but in fact it's an expense of USSI. So to book this kind of intercompany transaction, I'm going to go across into the General tab. And in my offset company, I'll select USSI. And under the ledger, I will say this is travel expenses or hotel expenses. Let me see if there is travel. There is travel expense 601,500. And it is asking me to select financial dimensions. So for my credit, I have selected GBSI, and for my debit, I have basically selected the intercompany USSI legal entity, which will turn this normal vendor invoice transaction into an intercompany transaction. So I'll go ahead and validate it. Says the journal is okay. And now I'll go ahead and post it. So if I click on the voucher, I can see that the credit part is going to accounts payable because I still need to pay that hotel vendor for 1,500. But the debit part is not going as an expense for GBSI P&L, but instead it is showing up as intercompany receivable USSI. So now if I log into the books of USSI, I should see a similar entry on the other side in travel expense account. Go across into the trial balance. And if I go across into the travel expenses account, I can see the transaction which was there, which came across from GBSI, is showing up in USSI as well. If I click the voucher, I can see the 1,500 as a debit to travel expenses, and the credit part is showing intercompany payable GBSI 231350. So as you can see, this process of recording the intercompany transaction within Dynamics 365 automates the second part of the intercompany transaction. So I had recorded an invoice in GBSI, which recorded or which posted an automatic entry in the books of USSI as well. So instead of two companies recording two separate transactions, we now have a process by which the original transaction, when it is recorded in the first legal entity, automatically posts a transaction with the right posting intercompany accounts in the other legal entity. In this lesson, you will learn about the consolidation process in Dynamics 365 Finance. Now, in our earlier lesson on intercompany transactions, we spoke of two separate legal entities from Google having a transaction between each other, and that being termed as an intercompany transaction. Now, taking that same example further, the hundreds or thousands of legal entities within the Google group will have financials like balance sheet, profit and loss account of each legal entity separately. But for the purpose of viewing it as a group, the entire Google group financials, the results of each of the legal entities will be consolidated into a single legal entity. On the screen, you can see that CG is the consolidation group, and C01, 02, and 03 are individual legal entities which have separate financial results. Now, at the end of the reporting period, all of these separate legal entities will be consolidated together into a single legal entity. Now, within Dynamics 365, C01, C02, and C03 will of course be three separate legal entities because the transactions, the journals, the invoices will be booked into each of these legal entities separately as they occur. Now, CG will be a fourth legal entity which you will create within Dynamics 365, but you will not have any direct transactions that are going to get posted into CG. But instead, it will just pull the data from C01, 02, and 03 as part of the consolidation process. Now, consolidation within Dynamics 365 can be done in two ways. One is an export and import process by which the results of C01, 02, and 03 are being exported out of the legal entities, and they are being imported into the CG group, which is probably in a different server or a different instance of Dynamics 365. And if you had all the four legal entities C01, 02, 03, as well as the CG company within the same instance of Dynamics 365, you could do what is called a consolidate online process, which does the consolidation by picking data from each of the three legal entities from the same instance and puts it into CG company. Now, this is what we are going to see in today's lesson. So on the screen, you can see that this is the consolidate online screen, and whether I'm running the consolidation process at the end of the month, at the end of the quarter, or at the end of the year, I will give in a description for the consolidation entry. I'll also give in a from and to ledger account number from which the transactions need to be pulled in. And out here, there's the date range. So I can consolidate for May, June, July separately as the months happen, or I can run it for the entire quarter or at the end of the year. So the date range helps me choose the consolidation period. And then there is the include actual amounts, which means it goes ahead and picks up the actual transactions being posted. Below that is the include budget amounts in case I want to consolidate the budgets as well as the actuals. In that case, I'll mark include budgets too. Of course, I'll have to give in a budget model when I'm marking this include budget amounts to be pulled. Along with that, there are different tabs for financial dimensions, legal entities, and elimination as well. In the legal entities, I'll specify C01, 02, and 03 because these are the three legal entities that I'm trying to consolidate. So I'm going to specify which legal entity I need to consolidate. And elimination is a process where you're removing the intercompany transactions because these should not form part of your consolidated results. So let's jump across into the application and pick up one example and see as to how the consolidated results appear. So now from our earlier example of C01, 02, and 03, I'm going to replace it with USSI and USMF as my sister or subsidiary legal entities, which will get consolidated into GLCO. So in the organization administration module, when I go across into legal entities, in my consolidated company, which is GLCO, there is a flag for use financial consolidation process. So this needs to be marked, and elimination also can be within the same legal entity GLCO, or it can be within a separate legal entity where you have one for financial consolidation and another for the elimination process. So now I can go ahead and run the consolidation process. To do that, I will go across into the consolidations module and basically choose consolidate online. So out here, I will say that this is the consolidation for USSI plus USMF for, let's say it is November 20. And in my accounts, I'm going to choose the first account to the last account. If I need it for a different range, I want to consolidate only for a select range of accounts, I can do that out here. And in my consolidation process, I will say November, and I will say till today. And as I said earlier, I'm not going to select the budget amounts, so I'll just select include actual amounts. In financial dimensions, if you have the same financial dimensions across all of the legal entities, those will be copied across. And in my legal entities is where I'm actually going to define as to which are the legal entities from which I'm picking up the data. So I'll say USSI and USMF. The second column is where you give in the share, the percentage of your holding, the consolidation percentage in case the ownership of GLCO company within these USMF and USSI subsidiaries is 50% only. I'll give in 50 out here. But in this case, I'll just leave it as 100. And if there are any differences for your conversion of different currencies, now USMF and USSI are within the same US region, but it could be a case where, but you could have a case where one is in US, one is in Europe, or one is in Australia, and which. So in this case, when you have exchange rate differences, it's basically asking us as to where we need to post this kind of differences. And in the elimination tab, you will define the elimination rules for removing the intercompany transactions that we spoke of earlier. With this much being selected, I'll go ahead and click on the OK button, which will run the consolidation process and basically consolidate the data from the two subsidiary entities, that is USMF and USSI, and put the consolidated data into my GLCO company, which is the company that I'm currently logged into. So let me go back into the consolidation module, and I can look at the consolidation transactions. There you go. As you can see, the first two lines show me that the transactions have been picked up from USMF and USSI company for that period that I gave for that range of main accounts from the chart of accounts, and it has transferred those consolidated entries into my GLCO company. So I can look at the transactions that I've come across from USSI, and it shows me a bunch of transactions that I've come across. In case I'm not happy with the consolidation, I can click the remove transactions button, which will remove this USSI, and then I can remove USMF as well. And let's say that the USMF and the USSI entity finance team has posted some more entries after I've run the consolidation. I can remove these transactions basically and rerun the consolidation process, which will bring in the fresh data from these subsidiary entities. And so now I'm going to go across and open the trial balance, and I'm going to say let's look at transactions that are dated for today within GLCO company, which is my consolidated legal entity. And it shows me a bunch of accounts that I've come across. So let me pick this example of travel expenses, that is 601,500. So if I click the transactions, it shows me that there are two transactions that I've come across. One is 1764.71 and 1980.2. So one of these transactions has come across from the USMF company, and the other is the transaction that has come across from the USSI company. So if you remember the amounts, one is 1764.71 and one is 1980. So now let's log into USMF company and open the trial balance for the same date range, and we'll go and look at the transaction that was sitting under the travel expenses, which is my 601,500 account. So if you remember the two lines that we saw in the GLCO consolidated legal entity, one was 1980. So this is the transaction which has come across from USMF. And if I now log into USSI company for the same travel expenses ledger account, I will see the other entry that was showing up under GLCO company. So log into 601,500, and if I click one travel expenses, I can see this transaction of 1764.71. So I hope you now understand with this example that the transaction that you're posting into the individual legal entities like USSI or USMF can be consolidated across into a separate legal entity using the online consolidate process within Dynamics 365 Finance. Just to highlight the skills that you have learned as part of this training course, you have learned about the posting of journals, which results in the inquiries and the report. And you can use inquiries like trial balance, accounting explorer, which will help us view the transactions of the journals that you have posted. And then we followed it up by looking at the financial periods opening and closing process. We understood the GL allocation process within Dynamics 365 as to how do you allocate the expenses to different accounts or different financial dimensions like business unit, cost center, department, or even separate legal entities. And then you learned about the intercompany accounting process, which is basically the recording of the intercompany expenses. The example that we spoke of out there was the hotel expenses of one legal entity being paid by another legal entity. And lastly, you learned about the consolidation process within Dynamics 365, which is basically consolidating the financial results from the sister legal entities into a single consolidated legal entity. Finally, I would like to thank you for attending this course. and hope that you now understand the concepts of the General Ledger module and that you have moved a few more steps ahead in your journey of learning D365 Finance. If you found this course useful, please do share it with your friends and colleagues, and also please do leave a high rating, as it will help me to come up with more courses similar to this one. Thanks again, and bye-bye.